All right, welcome to this session. This session is just to show us a proper analysis of how we take trades when we are using the supply and demand zones with the combination of 1 hour and 5 minutes time frame. I think it's important I share this with all of us because I think some people are still having problem trying to do the proper analysis and take trade by themselves. I want everybody to be able to analyze the market with this strategy and be confident enough to go ahead and take trades. All right. So I I took my time to let me share my card. I took my time to really explain to us in different training videos on some of the concepts that we apply with this strategy. And I think we have up to about 3 or 4 set of videos explaining the concept before I introduce this strategy to everybody. Everything is on the YouTube channel, Triumph Trust channel. If you go through the videos very well and carefully, you'll be able to understand why we take trades and how we take trades with this strategy. So even if you watch this video, you can still go back to those videos and watch them again. Then note down some of the concepts that are involved in this strategy. Practice them and see how you can become conversant with them. Then you'll be bold enough to take trades. Where the person that learns this strategy from doesn't even use any indicator. He uses plain chart, no indicators. So I apply the indicators because it's not everybody that will be able to get to such a level. So that is why I apply the indicators so that at least it will help us to be able to identify some of these key areas where we need to take trades. All right, so I will start with gold today. The gold self setup for today. I posted it on the Telegram channel, but when I posted the price has moved from the entry point. All right, so this is what you may be seeing some other zones below here. So for the zones, you can the ones that have been proven profitable to me are the ones that are just created. Once the zone is just created and there is a retest of it, especially when the retest happen after a break in market structure. After this a break in market structure, so price can break this low and go for the retest. See the move. Although this one, there was no break in market structure here, but there was the retest and finally broke market structure here. You can see that finally broke market structure at this point, at this level. Then went for the retest and see the drop today. So those fresh zones have been proven profitable. Then there are other zones that may not be fresh, like this USD card zone. This is a zone that has been there for a long time. For a very long time. This zone was created on the 21st of January this year, 2021. And it was today, being 16th of February, that it was retested. So for such a long zone like this, all you have to make sure is ensure that after that retest, there is a break in market structure before you look for your entry. This is it. So before you look for entry for a zone that has been tested for a long time, that been created for a long time, ensure you wait for breaking market structure. This one you should before. you look for your setup. Setup will be here. All right, so let's take it one after the other. Gold today. I'll share this one too. This one and this one. Look at, we are using a combination of the 5 minutes and the 1 hour. So when this zone was created here, price traded away from it, went back for a retest here. This was the retest in the 5 minutes time frame. Look at this point. That was the retest. Then price moved down and went back again to do for a second retest. Traded out, move this way, traded out, move this way, and finally drop. So what we are looking at is when price retests the zone in the 5 minutes time frame on the retest of the zone, which is this one or the first one. I'm using this one to explain because this is the one that has the zone still visible. On the retest of the 1 hour zone, there should be a new zone created in the 5 minutes time frame. Please, let's take note. A new zone created in the 5 minutes time frame. Once that zone is created in the 5 minutes time frame, we are waiting for another zone to be created below it. We don't want to depend on this first zone that is created. We want to have a new zone created under it as a confirmation that price is actually about to reverse from this point. So once that has happened, you are not going to take the trade on the rate test above the 200 exponential moving average. We want price to trade away from that zone, breaking structure, the market structure. What happened here now, price trading away from the zone and rate test should happen on the second zone. So when price trade away and breaks market structure, we want it to break the 200 exponential moving average. We don't want it to go and retest above the 200 and take the entry. No, we want a break of the 200 level. My advice is you should just trace zone below the 200 exponential moving average. But once we have a zone here, let it break below the 200 exponential moving average. So on the rate test of this particular zone, that is when we take our entry. Then see what happened. Now, for you to know the exact point for you to take your entry, make sure when price trades away from this particular zone, you will be seeing it here too, which is this bearish candle. As soon as price trades away from the zone, which is this bearish candle, there should be an order block created. If you watch one of my videos, there are a video that talks about the concept, some concept using this strategy is on the YouTube channel or in the Telegram group. You will see I talked about the concept of order block, fair value gap, and zero tracks. So you should create an order block. This is what I share with my VIP group. So you should create an order block while trading away from the zone. So you can change here to 1 hour time frame and you mark out that order block. Look at the order block here. Let me take this out. So you mark that order block, the bullish candle, that bullish candle before this downward push. So mark it out. I want everybody to be able to analyze this market and trade it by themselves. So when you mark this, once you see this drop in the 5 minutes time frame, you come and identify the order block before that push. So you mark that order block, then go back. You can go to 15 minutes time frame first. This is it. So in the 15 minutes time frame, see, you should look for the recent order block that was created before the push. So in the 15 minutes time frame, this is it. Look at it here. You mark it out. So when you do that, also come to where our entry time frame is 5 minutes. Go to the 5 minutes time frame. And in the 5 minutes time frame, this is what you will have, this other block here. So, but your marking, you should add the upper zone. So this is it. So we expect the price to get to this zone and drop. But unfortunately, price didn't get to it before dropping. So you see that price did not get to it before dropping. You don't have to jump into the trade. Just allow it to go. So when that happened, this is the retest. This green candle is this move that was going for the retest. But if you look at the 1 hour time frame, you can see that price actually got to the other block. But it will be too big. Your stop loss will be too big if you are considering this other block in the 1 hour time frame. So you allow it after the retest, which is this one, price drop down. And at this point, what happened? It broke market structure. So this is a very strong confirmation for you to take a sell. So the next thing you do, go back to the 1 hour time frame. When that drop happened, we had an order block created here in the 1 hour time frame. So those are the extra marking you see on the setup I post in the Telegram group. So this is a 1 hour order block that was created when this push happened. So go back, you can reduce to 15 minutes time frame and gradually reduce it. So the other block that has not been retested here is this one. So you mark the other block. Then we have a fair value gap. This is a valid point of entry as well. So this one, the other block, this fair value gap. So price may come to this fair value gap and drop, or goes to the this zone, the other block before dropping. So when this happens, our entry time frame is 5 minutes. You must always go back to that 5 minutes. Why we are doing this is for you to have a smaller time stop loss in case the market goes against you. We are not sure the market will drop, but there is a likelihood that the market is going to drop. So on the 5 minutes time frame, this is the other block we have that has not been retested. So you mark it out. This is it. So this is your 5 minutes. So this is where you are expecting the next entry from. And what happened here? Price went back. And price should not go with force to go and do the retest. Price should gradually move up. And what happened as price get to this point, you take your entry. So you are taking yourself as soon as price hits this zone, and your stop loss will be here. Because of spread, if you look at this trade, the spread here is okay, this is good. So because of spread, you can, instead of you to place your stop loss here, you can decide to check this your spread. The spread, what I saw here is about 38.55, about 20 pips. Let's assume it's 20 pips. So that will be too much. Just look for the spread and add it to your stop loss. But basically, this is your stop loss level. This is your stop loss level. So if you're afraid of spread, you can leave this trade open. As soon as, if price closed above this zone, you close the market. So as soon as price gets here, which is this area, this pin that came to retest here, your take profit, your first take profit is going to be the area where the market moved from to go for the retest here. The market moved from here to for the retest. That is where your first take profit will be. So on this trade, what are you having? Your first take profit is going to be like 71 pips or let's say 70 pips. That is your first take profit. So your second take profit, you will see another supply demand zone below. Like in my chart, you see I will mark them. So you use them as your take profit, or you can as well go to the 4-hour time frame in your 1 hour and mark out your order, the supply zone you have. Sorry, the demand zone you have here. You put it as your final take profit. So as you can see, this is where we are talking about. Sorry, here. So this is the rated first take profit here. Your final take profit will be here. That is how you place your take profit and your stop loss. That is that for that one. Then look at this one. Price came back. This price did not move down. It came back to do a retest here, and after that retest, price drop. As price is dropping, ensure you mark out the order block, which is the one that happened today. So today, when price retested that zone here, look at the retest, this area. So we want to see price move, create a new zone. I want to see price create this zone. Okay, on the retest, the zone was there already. So we want to see a new zone created under this zone. This one, let me show you some difference. Look at this one. When price came to do this retest, there was no zone here, or it took out that zone. But we want to see a minimum of 2 zones before you take your entry. So this zone should be created and a new one. So this is the one we'll be targeting to take our entry. Then look at here. When this second retest happened, zone has been created already. So you are looking for a new zone. So a minimum of 2 zones present in this level before you take your entry. So a zone was created. So on this retest, after this retest, we want to see price. Price should break below the 200 exponential moving average before you can consider taking the entry. So once you see price break below the 200 moving average, you mark out this order block that will be formed. Go to your 1 hour time frame. So if you come to 1 hour time frame, when that happened, this was the order block that was created. For you to understand what order block is, please watch the other videos. So this is the order block that was created, the last bullish candle before the drop. So as soon as that happened, go to 15 minutes time frame so that we can continue to reduce it. So this is the order block we have here. When this push happened, mark it out, reduce it to that order block. So then our entering time frame is 55 minutes. Go to 5 minutes. Then here, the last order block before this push was this one, and we're having a part of it. So you cannot shift this zone from this order block. As far as it is inside the zone, you don't shift that zone from it to this upper one. Don't shift it. Even this one has been retested. Look at it here. So this was retested by this week. This is the last order block we have here before this push. It has been retested with this week. So the only thing you can do is for you to allow that zone to be like that, or you mark out this rejection week. So as soon as price gets to the zone, you take your entry either here or here. Then your stop loss is going to be here. So where is your first take profit? This is your first take profit, where price moved from to go and do the retest. That is your first take profit. Your second take profit, I told you, you see some demand zone below here, or you go to the 4 hour time frame and mark the demand zone. That is where your final take profit will be. And that is how the market moved today. So it's as simple as that. Just take your time to study. It's a gradual process. Do not rush. Forex is not a get rich quick scheme. Just take your time. Once you have gotten it right, do proper risk and money management as you are taking your trade and gradually build your account. You must not get rich today. Gradually, if it is $1, $5, $10, depending on your small account balance you are using, just gradually you build it over time. So there's no need for you to start using bigger lot size. Proper risk management is very important. So that is the analysis. Then look at the one of USD CAD today. Look at it. This is an old zone, old demand zone that price came to retest. I told you once this happened, ensure price break structure, price broke market structure here. Then when that happened, let me go to the 5 minutes time frame. When that happened, we see this other block created. This was the other block that was formed when this push happened. So you mark it out. And after the reduction, this is where it got to. So as soon as price gets to it, take your entry here and your stop loss here. So when price came to retest this point was here. So that is where your take profit will be. So your first take profit will be here. Price moved away from this level to come and do the retest. So once price get to it, from here price got to the first take profit, then retraced back for another retest, and finally moved up to see it got to the 1 hour. There were other supply zones lined up here. It broke above them and got to this final level. So that is how we took this USD card. And there was another AUD USD. Look at AUD USD. This is an old zone too. So you wait for price to break structure. Price broke market structure. And the other block we had here was this. So if you go to the smaller time frame, which is a 5 minutes time frame, this is where it was. You must ensure price has broken below the 200 before you wait for it. And as soon as price gets to it, take your entry, your stop loss here, first take profit here, second take profit, look for. Other block was demand zones were lined up here. So you can use this swing low, or you go to the 4 hour time frame and use the demand zone of the 4 hour. That is for USD, AUD, USD. Now, we also took Euro CHF. This is Euro CHF. Euro CHF. Euro CHF was a fresh zone. It was not a long time zone. So price retested it here and also did the retest here today. So when this price moved away, this was the other block. So when I mark this other block, just a moment. So after marking this other block, just reduce it to the 5 minutes time frame, which is here. So you can see price has broken above the 200. On the rate test here, you take your entry. Mark your entry here, your stop loss here, first take profit here, and final take profit, you'll be looking up here. So this trade was really sluggish today, very sluggish, and it will not give you any reasonable pips. Euro CHF from your entry here to this first take profit level, just 5 pips. Very annoying, but it's still okay. So the one that failed today was USDJPY. That is the last one I'm going to talk about. You will look at USDJPY. So we were having a zone here. There was a supply zone here, an old one. There was a supply zone here. Let me see if I can get to it. Yeah. USDJPY. Yes, I think this is it. This is the USDJPY. So look at the zone here, an old zone. So we'll wait for price to break structure because it's an old zone. As price broke market structure, this is the order block that was created. So let me just go back to the chart. So this is the order block that was created. So when I marked it out, it was this one in the 5 minutes time frame. So price got to it here. So entry will be here, stop loss here, and take profit will be where price moved away from first take profit before you think about the other take profit. But what happened? Price traded a little bit downward, retested this 200, move up, broke above it, and that was how it moved up. So we lost this, we lost this trade, and we pushed and broke the supply zone that was there and continued upward. Somebody asked me if why I was taking the trade for a sell, why it was a bullish trend. I just told him it was a scalping, so I was expecting price to reject from here, trade down, then before pushing upward. So that is it. So just take your time to go through the video and look into it, practice it. You can back test it and see how far you can go. We'll be posting trades in the free Telegram group to confirm our entries. Ensure you take part of it. And when you are taking trades from the Telegram group, please use proper risk and money management. All right, that will be end of this review. Thanks for joining. So if you have any question on the description below this video, you have my contact there, or yes, a free Telegram group link in the description. So you can click on it and join the free Telegram group. We also run a VIP group as well. That is it is a paid group. So if you want to join it, my contact is below. You can contact me, or when you join the Telegram group, from there you can contact me for you to join the VIP group. All right, thank you very much. And please do subscribe to our YouTube channel, comment and like our videos. You can also share the videos so that others can also learn from it. When you subscribe, please click on the notification bell so that you will be notified when we upload any new video. All right, thank you very much and have a nice, a profitable trading week.